Sunil, thanks very much. Afternoon. How do you rate the budget?
So I think, a lot has been already said, so there is very little incremental I can share with you. But the only good thing is that this is a policy statement. It is behind us. There has been no, disruption in terms of the way we do business, the way the investments have taken place. And I think the fact that a lot of market participants were expecting some tinkering with the capital gains and that has not happened, I think that should be the biggest positive from a capital market perspective. Obviously, the fact that the 3.5% fiscal deficit target has been retained despite additional both planned and unplanned expenses, I think that should be a key positive. There have been some segments, obviously, where there has been some enhanced tax, specifically so-called the HNI or the rich category, whether it's a dividend or a particular amount or some tinkering with excise on garments above a particular amount, as well as ATF, fuel, and even on motor cars. Other than that, I think it's been a pretty good budget given the circumstances we are in. And the fact that we have maintained the fiscal deficit at 3.5%, as I mentioned earlier, should give us hope that some kind of rate cuts can be expected as we move forward. So I think all in all, a pretty decent budget.
This more and more things are getting clear as they do every budget. A few hours down the line, many more things start appearing as well. So this oil bit, cess has been changed from 4,500 rupees a ton to 20% ad valorem. I think much higher than what was expected.
No, I think the current cess is 9,000. The expectation was that the cess would be reduced to 4,500. So in that sense, the cess has been reduced, but it is lower than what people expected. But I think it's okay. You'll have some sectors which will be positively impacted here and there, and some which would be negatively impacted. But I think we have seen over the past 4-5 years that the budgetary announcements and the tinkering as far as the tax rates are concerned are sort of, taken the stride by the respective companies and sectors, and we are back in business as normal in the next few weeks. So we should not be unduly worried about that.
No, the cess payable to the government by upstream oil marketing companies was 4,500 rupees a ton. That is now 20%. That is what I'm reading from the document, which is now uploaded. So this is... maybe you're talking about something else. I think there was another expectation as well, but this is the cess to the government from companies. I think oil market...
Our understanding is that it was 9,000 rupees, and which has been brought now to 20% ad valorem.
Okay, fair enough. Tobacco, Sunil, the 10%, 10.3 odd percent is the average hike. Better than expected?
See, again, as I mentioned, Prashant, 1 or 2% here and there should not lead to any major sort of case for either investment or disinvestment, in respective stocks and sectors. So yes, there are a few sectors which obviously pre-budget always have some negative expectations. Cigarette is one of them. And, the expectation was that there would be a 12 to 15% hike in excise on cigarettes. Instead, it's come to more closer to 10%. So we have seen some short covering maybe, from day traders there. But I don't think that 1 or 2% lower is going to make a person, take a fresh view. So I think it's status quo as usual. There should not be anything too much read into a small, surprise, both on the positives and the negatives as far as sectors are concerned.
Sunil, it's quite telling. You said in a way the biggest positive is what has not happened in the budget, right? Tinkering with capital gains, etc. So in a way, and we've heard this from other corporates as well. Now there isn't very much. They didn't have very much room to do things. They've stuck to the target. So this is what you essentially get. But in terms of enthusiasm or making any significant change, this budget doesn't do that, right?
So yes, the leaving the capital gains as it is has been sort of a positive in the sense that there was a built-up of a case for imposition of long-term capital gains or increasing the tenure of your investment which would qualify as long term. That has not happened, and obviously when you expect something negative and the negative does not come in, it is taken as a positive. On the overall policy document, I think the message is very clear. The country has to focus on development, the country has to focus on agriculture, and the country also has to focus on infrastructure. So the outlay for road and rail has been increased quite dramatically. Without increasing the fiscal deficit, the finance minister has ensured that the poor are given a little bit of a benefit at the expense of taxing a little bit more as far as the so-called luxury items are concerned. So I think in the direction I think the budget has met our expectations. But increasingly over the last 3-4 years, if you see, the budget is more now a policy statement rather than a tinkering of taxes too much, because our tax regime is more or less settled. This budget obviously is trying to get the message that we are giving you one last opportunity to come clean by way of so-called VDI scheme. Again, the message is very clear that henceforth the tax compliance would be taken very seriously. So I think in terms of the direction and the message, the budget comes out very, very clear.
Sunil, thanks very much. Great speaking with you.